Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
Welcome back, everybody, for another deep dive. This time, we're going to be talking about mergers and acquisitions, and specifically in the lower middle market, or LMM.
Yeah.
So this is a segment of the market that we don't talk about as often as some of the larger deals.
Right.
But it's a really interesting space where private equity firms can really unlock a lot of value.
Yeah, for sure. And I think, a lot of times when people think about private equity, they think about these, these huge mega deals.
Right.
But, there's a lot of opportunity in this lower middle market.
Yeah.
And a lot of value that can be created.
And I think that's what we're going to try to dig into today.
Yeah.
Our source material is this great article called 5 Private Equity Strategies Used in the Lower Middle Market to Create Value.
Right.
So we'll kind of go through these 5 and talk about how they're implemented and kind of the impact they have.
Yeah.
So the first one is buy and build. And I'm curious, like when you think about the LMM, what makes that such an effective strategy there?
Well, I think one of the things that's really interesting about the lower middle market is that a lot of industries are what we call fragmented.
Okay.
So you have all these little players,
right,
but nobody really has a dominant position.
Got it.
And that's where buy and build can be so powerful.
Okay.
Because a private equity firm can come in and maybe they start with what they call a platform company.
Okay.
And then they start buying up all these smaller add-on acquisitions.
Right.
And gradually they're consolidating the market.
Right.
So instead of having, 10 little companies all competing with each other,
yeah,
they now have one larger company.
It's like putting together a puzzle almost.
It is, exactly.
Where you have all these little pieces and then they form this bigger picture.
Right.
So like instead of having, 10 independent bakeries struggling to compete,
right,
they're now all combined into like a regional powerhouse.
Right, exactly.
And that brings in the concept of synergies, right?
Exactly. And I think that's a really important point because, a lot of people think about mergers and acquisitions. They think about just getting bigger.
Yeah.
But it's not just about getting bigger. It's about creating synergies.
Right.
So in this case, you might have economies of scale, right? You're buying in bulk, you're spreading your overhead costs over a larger revenue base.
So you're more efficient.
You're more efficient. You might be able to streamline operations.
Okay.
You might have more market power.
Okay.
Because now you're the big player in the market.
Right, right.
So there's all these different ways that you can create value through synergies.
And I imagine that, depending on the industry, those synergies can manifest in different ways.
Absolutely.
So if we take your example of the bakeries,
right,
maybe they can centralize their production.
Right.
Maybe they can get better distribution deals because now they have more volume.
Right, exactly.
Or, they can build a stronger brand presence because they're not all these little fragmented brands anymore.
Right, exactly.
So it's really about, not just getting bigger, but getting smarter.
Yeah, exactly. Yeah. And I think that's a key takeaway.
Okay.
And the other thing that's interesting about buy and build is, when the private equity firm is ready to exit, they're not selling back into the lower middle market.
Oh, good.
They're selling to the middle market.
I see.
So they're getting a higher valuation.
Oh, that makes sense.
Because they've created this bigger, stronger company.
Yeah.
That's now attractive to a different buyer.
So it's almost like they're graduating.
They are.
From the LMM to the middle market.
Exactly.
By using this strategy.
Exactly.
Okay, that's really interesting. That's a good point.
Yeah.
Okay, so let's move on to strategy number 2, which is financial and operational improvement.
Yeah.
So a lot of times, these LMM companies, especially founder-led businesses, might be doing okay.
Yeah.
But there's room for improvement.
Right.
Right. In their operations or their finances.
Absolutely.
So how does a PE firm kind of approach this?
So it's kind of like, you have a car.
Okay.
The car runs fine, but you could probably get a little bit more horsepower out of it if you just fine-tuned it a little bit.
Okay.
So that's what private equity firms are doing. Okay. They're coming in and they're looking for ways to optimize.
Yeah.
And it could be a wide range of things. It could be supply chain management. Right. It could be inventory control. It could be cost reduction. It could be pricing strategies.
So they're bringing in like expert consultants.
They might.
To come in and identify those bottlenecks or those areas where they can improve.
Yeah.
And then help them implement those changes.
Absolutely.
Okay, so it's not necessarily that the company's doing poorly.
No, not at all.
It's just that they're not doing as well as they could be.
Right.
Right.
Exactly.
And there's this, kind of untapped potential that the PE firm can help them unlock.
Yeah, and I think especially with founder-led businesses.
Yeah.
The founder may be great at the product and great at the vision.
Yeah.
But maybe not so great at managing cash flow or setting up, robust financial reporting systems.
Got it.
And so the private equity firm can come in and say, look, let's help you with that. Yeah. Let's put in place some best practices.
So it's kind of providing that framework and expertise to help them grow in a sustainable way.
Exactly.
Okay, cool.
Yeah.
So that makes a lot of sense.
Yeah.
All right. So strategy number 3 is all about growth. Growth capital and expansion.
Yeah.
So this is a key part of the PE playbook, right?
Absolutely.
They come in, they provide this capital. But how does that really play out in the LMM specifically?
So, a lot of times these LMM companies have a great product or a great service.
Yeah.
They have a lot of potential.
Right.
But they just don't have the resources to grow.
Okay.
So the private equity firm comes in and provides that capital.
Right.
And it could be used for a variety of things.
Yeah.
It could be used to expand into new geographic markets.
Okay.
It could be used to develop new product lines.
Okay.
It could be used to bolster sales and marketing efforts.
So let's say you have a local brewery.
Yeah.
That makes amazing beer.
Right.
But they're really selling it locally.
Right.
A PE firm could come in and say, hey, let's get you national distribution.
Exactly.
Or let's help you launch a new line of craft sodas or whatever it might be.
Exactly.
And I imagine that the PE firm's network and experience
yeah.
can really be valuable there too,
Absolutely.
right? Like they know the right people,
yeah.
they know the right distributors, they know the right, marketing agencies.
They know how to scale a business.
Exactly.
They've done it before.
So they can help them make smart decisions
right.
about where to invest that capital.
Exactly.
Okay, that makes a lot of sense.
Yeah.
All right, so let's move on to strategy number 4, which is management and governance improvements.
Yeah.
So this is a key area, especially in the LMM,
yeah.
where a lot of these founder-led businesses
right.
might not have the most, robust
yeah.
management structures
right.
in place.
Exactly.
So how does a PE firm kind of approach this?
Well, they recognize that strong leadership is essential for long-term success.
Right.
The founder may be passionate.
Yeah.
They may have a great vision.
Right.
But maybe they're not the best CEO.
Yeah.
Or maybe they need help, building out their management team.
Okay.
So the PE firm might come in and say, hey, let's bring in some seasoned executives. Or let's provide some leadership training to your existing management team. Right. Or let's implement some formal governance practices.
Like more robust financial oversight.
Right, exactly.
Right.
So it's all about building a stronger foundation for the company's future.
So it's not necessarily about replacing the founder.
Not always.
It's about bringing in the right expertise to complement their strengths.
Exactly.
And help the company navigate this new phase of growth.
Right.
That makes a lot of sense.
Yeah.
Now I'm curious, when a PE firm does this, what happens to the founder?
That's a good question.
Do they always stay on?
It really depends.
Okay.
It depends on the founder. It depends on the situation.
Yeah.
Some founders are happy to stay on and work alongside these experienced executives.
Right.
Others, might prefer to step back.
Okay.
Maybe they take on an advisory role.
Got it.
Maybe they focus on a specific area of the business that they're really passionate about.
Yeah.
So it really varies.
So it's about finding the right fit
exactly
for everyone involved.
Yeah. And remember, the PE firm's goal is to maximize returns.
Right.
So they want to make sure that the company is led by a capable team.
Makes sense.
That can execute the growth plan.
Yeah.
So it's in everyone's best interest.
Yeah.
To have the right leadership in place.
Okay. That's a really good point.
Yeah.
All right, so let's move on to our final strategy for today, which is exit planning and timing.
Yeah.
So this is where things get really interesting, right?
This is where the rubber meets the road.
Right. This is where the PE firm, they've done all this work.
Right.
They've invested all this capital.
Yeah.
And they're looking to, get their return.
Right.
So how does this play out in the LMM?
Well, one of the things that's important to understand is that exit planning starts early.
Okay.
It doesn't start, 5 years down the road.
Got it.
It starts during the due diligence process.
Interesting.
Because they're not just thinking about buying the company.
Yeah.
They're thinking about how they're going to sell it.
So they're already envisioning
Exactly.
those potential exit scenarios and how they're going to position the company to be attractive to buyers.
Absolutely. Absolutely.
Okay, so what are some of the common exit strategies in the LMM?
So, it could be a sale to a strategic acquirer.
Okay.
It could be a sale to another private equity firm.
Okay.
It could be an IPO, although that's less common in the LMM.
Got it.
But the key is to start thinking about it early.
Yeah.
And to identify those potential buyers.
Right.
And to start building a story that's going to be attractive to those buyers.
So it's almost like they're building a valuable asset
Exactly.
that they can then sell down the line.
Right.
Okay, but how do they determine the optimal time to exit?
That's a good question.
Right. Because, you want to maximize your return.
Right.
But you also don't want to,
Yeah.
wait too long.
Exactly. It's a delicate balance. You
Yeah.
have to look at market conditions.
Right.
Is the industry doing well?
Right.
Right.
Are valuations high?
Yeah.
You have to look at the company's performance.
Okay.
Is it meeting its growth targets?
Right.
Is it generating strong cash flow?
Yeah.
And then you have to look at the PE firm's own investment strategy.
Okay.
What's their time horizon?
Right.
What are their return targets?
Yeah.
So it's a lot of factors that go into that decision.
So it's really about finding that sweet spot
Exactly.
where the company's doing well,
Yeah.
the market's receptive, and the timing aligns with their investment goals.
Exactly.
Okay, that's really interesting.
Yeah.
So we've covered a lot of ground today.
Yeah, we have.
We've talked about these 5 key strategies that PE firms use to unlock value in the LMM.
Yeah.
And I'm already starting to see how these approaches, while they're tailored to a specific segment of the market,
Right.
they offer valuable insights for businesses of all sizes.
Absolutely.
Whether you're a small business owner.
Or you're an executive at a large corporation. These principles of strategic thinking,
Right.
operational excellence,
Yeah.
and a long-term vision for success are really universal.
They are.
So I think there's a lot to learn from studying how PE firms operate
Absolutely.
in this space.
Yeah. And it's funny because a lot of these concepts, we've been talking about how PE firms operate in the LMM.
Yeah.
But a lot of these concepts can be applied,
Right.
on a smaller scale.
Absolutely. And that's a great point because, we talk about these big private equity firms.
Right.
But, most businesses aren't going on acquisition sprees.
Right.
So is there a way to apply this buy and build concept
Yeah.
in a more, modest way?
Yeah, absolutely. I think, instead of thinking about acquiring companies outright,
Okay.
Smaller businesses can think about strategic partnerships
Got
or
it.
collaborations.
Okay.
So maybe you're a local coffee roaster and you partner with a bakery to create, a combined cafe experience.
Yeah.
Or you're a fitness studio and you partner with a nutritionist to offer, more holistic wellness packages.
So you're creating kind of a mini ecosystem.
Exactly.
Where you're leveraging each other's strengths.
Yeah.
Without the complexity of a full-blown acquisition.
Right. Exactly. And, you can still generate synergies that way.
Right.
You might have some cost savings because you're sharing marketing expenses.
Right.
You might have some revenue synergies because you're cross-promoting each other's products or services.
So it's kind of a win-win.
It is. It is.
For both businesses.
Yeah.
Okay, that's a really good point.
Yeah.
Now, when it comes to financial and operational improvements, it seems like, every dollar counts when you're a small business.
Oh, absolutely.
So what are some key takeaways from the PE playbook
Yeah.
that entrepreneurs can apply to their own ventures?
I think one of the biggest things is just to be really data-driven and analytical about your business. Really scrutinize your expenses. Look for areas where you can negotiate better rates. Examine your workflows. Look for bottlenecks. Look for redundancies.
So it's about that constant improvement mindset.
It is. It is. Always be looking for ways to optimize, to do more with less.
And not be afraid to, really dig into the numbers and see where those opportunities are.
Exactly.
Okay, now accessing capital can be a major hurdle for small businesses.
Oh, yeah.
Especially those that aren't, on the PE radar.
Right.
So what are some alternative avenues that they can explore?
Well, there are a lot of options out there these days.
Okay.
You have small business loans.
Okay.
You have crowdfunding platforms.
Wow.
You have angel investors.
Yep.
You even have venture capitalists that focus on early stage companies. So there's a lot of different ways to get funding.
Yeah.
The key is to have a compelling pitch.
Right.
You need to be able to articulate your vision, your growth potential, and how you're going to use that capital.
Makes sense. So it's kind of echoing what happens in the PE world.
It is. It is. It's all about demonstrating value and convincing investors that you're a good bet.
Yeah, that you're worth the risk.
Exactly.
Okay, now this idea of management and governance improvements might seem kind of daunting for solopreneurs or small teams.
Right.
Right?
Yeah.
Like if you're a one-person show, how does that really translate?
Well, I think it's still important to have that mindset.
Okay.
Even if you don't have a board of directors, you still need to have clear goals.
Okay.
You need to have systems and processes in place.
Got it.
You need to be tracking your progress. You need to be making decisions that align with your long-term vision.
So it's like being your own CEO.
It is.
Even if your corner office is your kitchen table.
Exactly.
Right.
Yeah.
Okay.
And I think mentorship is really important too.
All right.
Find experienced business owners.
Yeah.
Find advisors.
Right.
Find industry experts who can provide guidance and support.
So it's kind of like building that support system.
Yeah.
Even if you're not part of a large organization.
Exactly.
Okay, that's a really good point.
Yeah.
Now let's talk about exit planning.
Mm-hmm.
It might seem premature for a young business
to
think about exiting.
Yeah.
But having that mindset from the beginning can be really valuable, right?
Absolutely. I think it's important to think about who your ideal buyer would be.
Got it.
Down the line.
Yeah.
If you were to sell your business, who would be most interested?
Yeah.
And then start making decisions that will make your business more attractive to that buyer.
So it's not necessarily about cashing out one day.
Right.
It's about building a business that's ultimately sellable.
Exactly.
Or transferable, even if you plan to keep it for years to come.
Right, right.
It's like laying the groundwork
Yeah.
for a successful future.
Exactly.
Regardless of what your ultimate exit strategy is.
Mm-hmm.
Okay,
Yeah.
so these parallels between the PE world
Yeah.
and the world of small business are really fascinating.
I think it just shows that
Yeah.
a lot of these principles are universal.
Right.
You know, whether you're talking
Yeah.
about
Yeah.
a $1 billion private equity firm
Yeah.
or a, mom and pop shop.
Right, it's about strategic thinking.
Yeah.
It's about operational efficiency.
Mm.
It's about focusing on value creation.
Exactly. Exactly.
Okay, so let's dive back into our source material.
Okay.
The article on the 5 key private equity strategies.
Mm-hmm.
One concept that I thought was particularly interesting
Yeah.
was this idea of synergies
Right.
within the buy and build approach.
Yeah. I think that's a really important concept.
Yeah. And we talked about, the combined dental practices
Mm-hmm.
benefiting from economies of scale
Right.
and a stronger brand.
Yeah.
But what are some other types of synergies that
Right.
PE firms look for?
So you have cost synergies,
Okay.
which is basically, the combined entity can eliminate redundancies,
Right.
streamline operations, reduce overhead.
So it's like finding efficiencies
Exactly.
and reducing expenses through integration.
Exactly. Exactly.
Okay.
And then you have revenue synergies,
Oh.
which is, the combined company can generate more revenue
Right.
than the individual parts could on their own.
Got it.
So maybe they can cross-sell products
Oh.
or services to a larger customer base.
Right.
Maybe they can expand to new geographic markets.
Right.
Maybe they can leverage a stronger brand.
So like that regional beverage company,
Yeah.
now that they have a national reach, Maybe they can introduce a new product line
Exactly.
that they couldn't have before.
Right, exactly.
Okay, that's a good example.
Yeah.
And are there other types of synergies besides cost and revenue?
Yeah, there's also what are called operational synergies,
Okay,
and these are a little bit harder to quantify,
got it.
but they can be just as important.
Okay.
So this is where you're combining best practices,
Okay.
sharing knowledge, leveraging the expertise of different teams.
So like if you have a company with a really strong sales team
Right.
and they merge with a company that's known for its operational efficiency,
Exactly.
they can kind of learn from each other
Yeah.
and improve their overall performance.
Exactly. Exactly.
Okay, so it's really about creating a more dynamic
Yeah.
and innovative organization,
Right.
but combining those strengths.
Mm-hmm.
Now, I imagine that achieving these synergies
Yeah.
is not always easy.
It's not. It's not.
Like
You have different company cultures. You have different systems, different processes.
Right.
So it takes careful planning
Yeah.
and execution.
Okay.
A lot of times PE firms will bring in integration specialists
Okay.
to help manage that process.
So it's not just about the deal itself.
No.
It's about what happens after the ink is dry.
Exactly.
I get it.
Exactly. Okay, that's a really good point.
Yeah.
Now let's shift gears a little bit and talk about the people involved, particularly within this context of
Yeah.
management and governance improvements.
Right.
So we talked about how PE firms often bring in
Yeah.
experienced executives,
Right.
especially in the LMM,
Mhm.
where founder-led businesses might be transitioning
Yeah.
to a more institutionalized structure.
Right.
So what are some of the key things
Okay.
that PE firms look for
Mm-hmm.
when they're assessing a management team
Okay.
during the due diligence process?
Well, first and foremost, they're looking for experience
Okay.
and track record.
Got
God,
it.
it has this team.
Successfully navigated similar challenges before?
Right.
Do they have a proven ability
Yeah.
to execute growth strategies
Okay.
or to manage complex organizations?
So it's about looking beyond the resumes
It is. It is.
and really understanding their capabilities.
Right. Exactly.
Okay. What else are they looking for?
They're also looking at industry knowledge,
Okay.
leadership skills,
Right.
cultural fit.
Cultural fit.
Does this team
Yeah.
understand the market dynamics? Can
Yeah.
they inspire and motivate employees?
Yeah.
Do their values align with the PE firm's investment philosophy?
So it's a pretty comprehensive assessment.
It is.
Right.
It goes beyond just financial acumen.
Right. They're looking for a team that can
Right.
not only drive financial performance, but also lead the company through this period of transformation and growth.
Right. Exactly.
And I'm curious, like, how does the founder
Yeah.
kind of fit into all of this?
That's a good question. Because the founder's vision is important.
Yeah.
But sometimes the founder may not be
Right.
the best person to lead the company
Right.
in this next phase of growth.
Yeah.
So it's a delicate balance.
Okay.
You want to respect the founder's vision,
Right.
but you also want to make sure that the company has the right leadership.
So it's a collaborative process.
It is.
Right.
Yeah.
Where the PE firm and the founder
Yeah.
need to work together
Right.
to figure out what that right structure looks like.
Exactly. Exactly.
Okay, that makes a lot of sense.
Yeah.
Now let's talk about growth capital
Okay.
and expansion,
Mhm.
specifically in the LMM.
Right.
So we touched on how this capital can fuel
Yeah.
various growth initiatives,
Mm-hmm.
but what are some key considerations
Okay.
when deploying that capital?
So, it's not just about writing a check.
Right.
It's about making strategic decisions
Okay.
about how to deploy that capital. So the PE firm is going to work closely with management
Got it.
to identify the most promising growth opportunities.
Okay.
They're going to conduct market research.
Right.
They're going to analyze the competitive landscape.
Right.
They're going to assess the potential risks and rewards.
So they're really acting as
Yeah.
strategic advisors
Mhm.
to help the company make
Yeah.
informed decisions about where to invest.
Exactly. Exactly.
And I imagine their network and experience can be really valuable there.
Absolutely.
Yeah.
They may have connections to potential customers, partners, acquisition targets
Right.
that can help the company grow faster.
So it's about more than just the capital itself.
Yeah.
It's about the strategic guidance and support that comes with it.
Exactly.
And while top line growth is important,
Right.
PE firms are ultimately focused on building sustainable and profitable businesses.
Right. Absolutely.
So they're not just looking at, how fast can we grow? They're looking at how can we grow profitably. Okay.
And that's where operational efficiency comes into play.
Right, yeah.
All those efforts to streamline processes,
Yeah.
reduce costs, maximize productivity.
Okay.
Those are all essential for supporting rapid growth without sacrificing profitability.
So it's about finding that balance.
Exactly.
Right, between speed and sustainability. Okay, now let's talk about the final stage of the PE life cycle,
Okay.
which is exit planning and timing.
Right.
So this is where, all those efforts to transform and grow the business culminate in a successful exit.
Right. Hopefully.
Hopefully, right. So as you mentioned earlier, planning for the exit starts much earlier. It influences decisions throughout the investment period.
Exactly.
So what are some of the factors that determine the optimal time to exit?
Well, market conditions are a big one.
Okay.
Is the industry thriving?
Right.
Are valuations favorable?
Yeah.
Are there any potential regulatory changes on the horizon?
So you're really trying to understand the macro environment.
You are.
And find that right window of opportunity.
Exactly.
Right.
And then you also have to look at the company's performance.
Right.
Has it achieved its growth targets?
Yeah.
Is it generating strong cash flow?
Right.
Is its brand reputation solid?
So it's about showcasing a track record of success.
Yeah, exactly.
And demonstrating a compelling growth story.
Mm.
Okay. And then I imagine the PE firms' own investment strategy and time frame come into play as well.
Absolutely.
Right.
They may have a specific holding period in mind.
Okay.
Or they may need to exit certain investments to return capital to their investors.
Yeah. So it's a delicate dance, balancing all these factors to maximize returns and ensure a smooth transition.
Exactly.
But beyond the financial aspects, what makes a truly successful exit?
I think a truly successful exit is one where the company finds the right home.
Okay.
It's not just about the price tag.
Right.
It's about finding an acquirer that shares the company's vision.
Okay.
That's going to continue to invest in its growth. That's going to provide opportunities for its employees to thrive.
So it's about leaving a positive legacy.
It is.
Right.
Yeah.
Where the company can continue to create value for all stakeholders.
Exactly.
And even though, PE firms are motivated by financial returns, a successful exit can have a ripple effect, right?
Yeah.
It can create jobs.
Absolutely.
It can stimulate innovation. It can even revitalize local communities. So it's a reminder that business isn't just about numbers.
It's not.
It's about people.
Yeah.
It's about communities. And it's about the positive impact that we can create through smart strategic investments.
Exactly.
Okay. So we've come full circle
Yeah.
on our exploration of private equity strategies for value creation in the LMM. It's been a really fascinating look, I think, into, how PE firms operate in this space.
Yeah.
But as we wrap up this deep dive, I'd love to kind of take a step back and think about the bigger picture here.
Yeah.
So what are your thoughts on the long-term impact of private equity's growing influence in the lower middle market?
Yeah, I think that's a great question and one that I think, sparks a lot of debate.
Yeah.
On the one hand, you have this potential for job creation and economic growth as these LMM companies, expand and thrive under PE ownership.
Okay.
We've seen how these investments can revitalize businesses, lead to innovation, increase productivity, even global expansion.
And that makes sense because a lot of these companies might not have the resources to do that on their own.
Exactly.
So the PE firm comes in, provides that capital, provides that expertise.
The connections.
And helps them reach that next level.
Exactly.
So that's definitely a positive outcome.
Yeah.
But I imagine there are also concerns.
There are.
About potential downsides.
Yeah.
So what are some of those?
Well, I think one concern is job losses.
Okay. Right.
If those operational improvements that we talked about lead to automation or consolidation, that results in redundancies.
Okay.
That can be a negative impact.
So it's kind of a double-edged sword.
It is.
Right.
you have the potential for growth.
Yeah.
But you also have the potential for some negative consequences.
And it's not always easy to predict how that's going to play out.
Exactly. Yeah. And I think, it really highlights the importance of responsible investing.
Yeah.
And considering the broader societal impact of these transactions.
It's not just about the bottom line.
It's not.
Right.
It's about the people.
Yeah.
It's about the communities.
The communities.
Yeah.
Okay. Now, you touched upon something earlier
that
I wanted to circle back to, which is this idea of, PEs focus on maximizing returns within a relatively short time frame.
Yeah.
So how does that tension between short-term gains and long-term sustainability play out?
I think that's a really important question.
Yeah.
And one that, there's no easy answer to.
Right.
Some people argue that PEs focus on short-term returns can lead to some negative consequences down the road.
Okay. Like what?
Well, they may be incentivized to cut costs in ways that could hurt employees or the environment or the long-term health of the business.
So it's really about finding that balance.
It is.
Right. Between, generating those returns. But also doing it in a way that's sustainable.
Exactly.
Now, another concern I've heard is that, if PE firms are consolidating all these smaller companies into larger entities, does that reduce competition?
Yeah, that's another valid concern.
Right.
We talk about monopolies. And the potential for, less innovation, higher prices for consumers. So that is something to be aware of.
So how do you see that playing out in the LMM?
Well, I think it's a complex issue. On the one hand,
consolidation can lead to greater efficiencies, companies of scale, which could potentially benefit consumers. On the other hand, it could lead to less choice, less innovation, higher prices.
So it's kind of a trade-off.
It is.
Right.
Yeah. And I think, it's something that regulators are looking at very closely. They want to make sure that these transactions are not anti-competitive.
Right. They're not stifling competition.
Exactly.
Okay. So it seems like finding that sweet spot is really key.
It is.
Right. Where PE is fostering growth and innovation, but not stifling competition.
Right.
Okay.
And I think, transparency is important.
Okay.
Ethical considerations.
Right.
A commitment to responsible investing.
It's about, doing well, but also doing good.
Exactly.
Right.
Okay, well, as we wrap up today's deep dive, I'm struck by how much there is to consider within this, seemingly niche area of the market.
Yeah. The lower middle market is often overlooked.
Yeah.
But it's a vibrant part of the economy, and understanding how PE firms operate in this space, I think, can teach us a lot about, just how business works in general.
It's been a really enlightening conversation.
Yeah, I agree.
And I think we've just scratched the surface.
I think we have to.
Of this topic.
Yeah.
So for our listeners out there, we encourage you to continue exploring this.
Yeah, absolutely.
There's a lot of information available online. You can read industry reports. You can listen to other podcasts.
Yeah.
And just, continue to educate yourself.
Curious.
Stay curious. Exactly.
Yeah.
All right. Well, that's all the time we have for today. Thanks for joining us for another deep dive.
Yeah. Thanks for having me.
And we'll be back next time with another fascinating topic.
Looking forward to it.
Until then, happy diving.
Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.